Welcome to day 44 of me backtesting my way to success. Let's just see how the first trade goes. First trade was a win, and the reasons why I entered were 4-hour fair value gap to the upside, 4-hour order block to the downside, right here. Equilibrium from the swing low to the swing high, right here. And a breakup structure in the lower time frames, which was also right here. Take profits with previous areas of liquidity. This one and also this one. Both take profits were hit. Let's just see how the next trade goes. And the next trade was a win and a loss. The reasons why I entered were this 2-hour fair value gap right here, 2-hour order block right there, as you can see, and the equilibrium from the swing low to the swing high. And on a breakup structure in the lower time frames, I entered really late because I wanted to have a break structure like even above this area, and so I entered only right here. Stop loss was below the previous area of liquidity, and that's why my stop loss was so huge, which was also not a good thing. Could have placed it like right here, wouldn't have made a difference, except for the risk reward ratio. But yeah, anyways, first take profit was hit right here. Second take profit was not. Actually, could have prevented this loss by moving my stop loss to the break-even point, because I was not too sure about entering on this trade, since we're in a daily order block right now, a huge one. But the reason why I entered was actually also because, as you can see, price barely reversed right here below the daily order block. So I thought the price might just go into the order block and then maybe go down, react to it, you know. But yeah, I actually would have liked to place or set my stop loss to the break even after my first take profit was hit right here. But I didn't. I don't know. I honestly don't know why I didn't do it. I was holding it down again. I was just looking at the market. And yeah, that loss could have been prevented, like I said. Let's just see how the next trade goes. And the next trade was another loss. The reasons why I entered were this 3-hour order block, equilibrium from the swing low to the swing high, breakup structure in the lower time frames right here. Take profits were this area of liquidity, this volume area, and also this area of liquidity. And right here, like I said, volume area, I actually tried it because a friend of mine currently uses it in almost every trade. And so as you can see, here's this volume range. Here, this red line volume range, that's where I marked it as a potential take profit. And yeah, I entered for 3 take profits, like I said, stop loss below the order block. And also, I think there's multiple reasons as to why I lost. First of all, trading against the trend. Second of all, right here, this 4-hour fair value gap. Hold up. 4-hour fair value gap. And right here, as you can see, price went into it, even went below the equilibrium mark. And then price just went up. And so I could have maybe entered right there, but as you can see, there's like the only proper break of structure would have been right here. And so setting that much of that huge of a stop loss would have been bad, not only because the stop loss is way too huge, but also because of the risk reward ratio. So I didn't enter. And I think actually right there with this candle, the equilibrium got already used, kind of, and so is kind of trading with only 2 confluences and against the bias and something else, but I just forgot it. But yeah, I think that was the reasons why I lost. And yeah, no, hold on, this is the last trade. So that's already it for today's episode. We'll see you in the next one.